I'll give the simplest strategy here for the sort of short-term traders. We have a sentiment indicator known as momentum swing. The momentum swing measures the momentum of a basket of the F&O stocks, and it moves between 0 and 100. So every time it drops below 20 or below 10, we think that is where the Nifty sort of bottoms out. So in a sense, I say that is where you should be buying call options. Now, the only thing you need to do there is watch for the market to turn as well. So because sometimes it can reach 5 and then next day it's 3. Yeah. And then it will reverse from there. We found this happening repeatedly. Every month or two, you have readings which hit the bottom end, and then the market bounces back from there. In fact, even on election day, the reading dropped to almost 3 because it was a wildfire sale, and intraday we could see the reading at 3, which is sort of gotten extremely oversold. All you need to do is wait for it to rebound so that you're not catching a falling knife. And then that becomes a very good entry for people who are buying.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter. And on today's episode, I'm thrilled to welcome back in our studio after almost 4 years, Rohit Srivastava of Strike.money. We are talking about his latest product, Strike, the Bloomberg terminal for retail investors. Thank you so much for doing this for the listeners. You were here back in 2019, and 2019 seems like a totally different era altogether. Like when I think about that era, in the 5 years that have gone by, almost 5 years that have gone by since you were last here, retail trading has gone through the roof. So I actually want to start with that. So folks, just a brief intro. Rohit Srivastava runs or used to run India charts, and that's for which he was here back in 2019. You should totally check out that episode. He's here with a new product called Strike.money. We'll come to that in a short while. Rohit, let's start with retail trading. What has changed? Why has this exploded? And you have any thoughts there?
So I think it's a long pending cycle. I mean, we probably heard the likes of Rakesh talk about retail coming back in a big way. And the last time we saw this was in an era where probably most people who are in the market were not there, which means I have to go back to the 1980s. I sense that 1980s into the Harshad Mehta era was the last time where retail investors really came in a big way, and it was a structural trend. My participation in the market, watching the market started 1990, and then I started working and I saw the peak of that cycle to 94. So it really lasted for quite a while. I feel that is what is sort of happening now, because people, a completely new generation that is saving. A lot of my cousins who are very young, who just gotten a job, all of them immediately want to invest. So that investment mindset has sort of got created. I don't know whether we should give some of the credit to the mutual fund industry that hard marketed, mutual funds through that phase, which you're talking of 2015 to 2018, 19, a lot of flows that started to come in. And that got to the mindset. And I think COVID provided an opportunity for people to just jump in a big way. And that trend has just continued. So This is a structural trend that looks like here to say. This is not a trend which I say, retail is coming, it's a bubble and they are going to get stuck. No, this is a structural one which is, continuing and going to go on for a long time.
Structural, cyclical. You never know. Let's talk about yourself. Last time when you were in 2019, I think that point of time you had just started India charts. So brief background about yourself to our audience, and what was India charts about and how that's transitioned now to Strike.
So I spent, I think, 18 years at Sharekhan, which is a known broker from 2001 to 2018, doing research, doing fund management, and along that way I started to write. I wanted to just share my independent opinion, and that is sort of what gave birth to India charts. So it was purely a content sharing platform, opinion sharing platform. And then I left in 2019, and that is when I got my partner Chavan Krishna joining me, and he wanted to get into training, which is mentorship. I said I'll not do these 1 day, 2 day sessions where you partly gain some knowledge and not the whole knowledge. So we did a full knowledge kind of session, lasts for several months, Sunday after Sunday, Zoom sessions, 3 hours long. So people have to put in that kind of time and effort to learn. But at the end of all that training, I found that, there are a lot of tools, a lot of things that we are using, scanners that I'm using to find stocks, which are not on any platform. And we wanted people to be able to use these features. And then there are a lot of features in the market also, which are floating around in bits and pieces. So we ended up thinking first of creating a platform that has our data and our tools. And then it evolved into something completely different, which is a terminal which has everything on the market at one place that retail investors should be able to use. So I didn't want to really make it institutional product, but have that quality and have that grade of knowledge that people should broadly have. And that is what led to the creation of Strike. So we spent, I think, all of 2023 in developing this product, investing in the UI, UX, the front end, and so on. And then we put it out in the market, and it's going to be something that will keep evolving, according to me, as it goes.
In our exchange on email, you called it like the Bloomberg for retail investors, So I want to just understand the various data products that are out there at different places that you chose to integrate into one. Okay, so now my understanding is that if you're a trader, you don't need fundamentals. So you don't need something like company annual reports. You don't need something like corporate action. Probably you do, just to figure out the timing aspect of it. But can you just help our audience understand the need for something like this? I mean, this is a pretty serious product. It's not something that you would take on your mobile and just check once in a while.
Absolutely.
Market kya lag raha hai. This is for people who are who look on the markets as a source of income, source of business or whatever. So let's talk about that.
Yeah, so you're absolutely right. People have to seriously sit down, and which is why it's still not a mobile app right now. If at all we do that, it would only be a limited version where you can track certain outcomes of the work that you're doing on the platform. And the platform itself is not meant only for traders. It's meant for traders, investors, mix of everything, whether you're doing derivatives, cash market, and so on. Because part of it comes from my own journey. I mean, if I started in the market, I didn't think that I wanted to be a technician or I wanted to be a fundamental guy. Mere ko paisa kamana tha. Like, that is the basis.
You don't want to be bracketed into one category.
Yes. And I came with the idea that I wanted to make money. There was no other idea there. Yeah. So when I did that, I was searching for all kinds of information on any company that, I wanted to look up. That, okay, where's the next, doubler or multi-bagger? And this is like 92, 94 Harshad Mehta and post-peak. All stocks are going all over the place. So you want to research it, then you want to know the fundamentals of it also. So I'm looking at magazines, comparing quarterly results. Now, today in a technology environment, I want to be able to do the same thing. Yeah. So that is where then we come from. That you want to see that data in one place, all kinds of data, which today, say for example, you want to know, in the result season, you want to know what results are coming up, you have to go to BSE website and then find out the result
calendar, our favorite. Yeah.
Now, why not have that in one place? There are insider deals which are happening, there are block deals which are happening. People don't have access to that data. Or it's put out in the evening by NSE, and then can I keep it on a day-to-day basis? So it should be quickly searchable. I can just type Reliance and know all the block deals that have happened over the last 6 months. Who bought, who sold, how much. And say if I'm a fundamental guy, I don't only want to know what is the PE ratio today. I want to look at the entire PE history. I want to see the chart, and I want an interactive chart, just like a technical chart where I can scan through the PE or EV by EBITDA or EV by sales, look at the price, look at the momentum and take a decision. Now, this is exactly what we've gone ahead and, created. Yeah. So it's not, that's why I'm highlighting the fundamental side. I can also talk about the technical features.
I want to come to that just to understand how is this different from other products, right? Because there are other products out there. They all have their own, specialties and some. Yes. So what's different here with Strike?
So what is different here is the visualization of data, so that you can actually see it, not just looking at numbers, but looking at a graph. So whether it's valuations, whether it is the historical earnings growth of the company, I can have a chart, I can have data, I can make a choice what I want. But data, visualization always helps, because when you see something in a chartical form, you can compare it, what happened in the past and what is happening now. It's much easier to take a decision. And so that is one of the big things. There's also a lot of data which you have to keep, and there's some data which is not on any other platform. Even though it's publicly available, it's not really been put up on a day-to-day basis and mapped. So those are the kind of things that we really got into. Say for example, for traders, one of the primary things one of the counter arguments is you can't catch market tops and bottoms. But we also know that markets are driven by herding. We also know that it's mass psychology. So why can't I measure this mass psychology? And the data is there to allow you to measure in various different ways, whether it's the positioning of the institutional and retail clients, which is released every day, whether it's the momentum of a basket of stocks which are all in FNO. We have things like put call ratios. We have things like the volume of puts and calls traded every day. All of this can be visually put to show you when sentiment itself has become extremely bearish, or when sentiment has become extremely bullish. And then those turning points can be found on charts visually. So just by putting this data into one place, which we call sentiment indicators, and they are in different time horizons. Like you can have short-term sentiment indicators, you can have medium-term sentiment indicators, and you can have long-term ones. And that then gives you a picture of where the market is. So that sort of becomes the first step for any trader investor, that okay, I decide that the market is at a point where I want to buy because people have become too bearish, right? That's the first thing you want to judge. Then the next step becomes, I want to find the stocks that fit that, or I want to know the sectors that are going to work out. And then there must be tools to help me find either the stocks or the sectors that are going to perform.
Correct.
So this whole journey I have to enable for every trader, investor, whichever route he wants to take, and the tools have to be there. So that is, I think, a nutshell of.
No, I mean it's obviously a big topic, and I think that we'll get to the advocacy part and the training part just in a bit. The thing is that now there is execution, which a brokerage does, and there are enough apps for that. So that the execution part of the whole thing is now well sorted, and then there is an intelligence part, which is. It's like classic Bloomberg, right? So Bloomberg is not a broker. Bloomberg is a information and intelligence provider used by brokers. Okay. Now you're the intelligence and information provider. I'm trying to understand that as a trader, how is it useful for me? Like, what's your pitch to traders? Okay. So that's the first question.
So for traders, what we do is we go into the sentiment indicators for the short term, right? We try to tell them that you can pick near-term highs and lows in the market, and then look for stocks within that. And for that, we have our own proprietary momentum indicator. There are many momentum indicators in the market. I created my own just to be a little faster than the ones that are already there. Like the MACD, I think, is the most well-known.
MACD,
MACD is the most common one.
Moving average uses. Convergence divergence.
Perfectly.
Sorry, go on. Just to clarify for people who are not. But sorry.
So that indicator, while it's great at getting points where markets have turned, it's also considered a lagging indicator because it picks up the turning points well after the stock has already moved for several
That's how
days.
Averages are.
Yeah. So can I speed that up? So I needed to speed it up. So we created our own momentum indicator that sort of speeds up the buy-sell signals so that you can quickly judge it. And then we have scanners where you can look at multi-time frames. I can look at what is happening on momentum on a daily, weekly, monthly and compare. So I can say, okay, show me a stock which on the monthly chart is bullish, but on the daily chart is giving me a new buy signal. I can look for all stocks with that combination. So out of a basket of, say, a Nifty 500, I could create such a combination and come up with the top 10 stocks or 5 stocks that meet that criteria and really reduce my work to only looking at those 5-10 stocks eventually. So that's how you speed up the decision making, because sometimes I have to take decisions in split seconds. If for example, I do a lot of options trading and mostly on the long side, unlike most people who try to sell options. Now, if I do that, I want to be able to take those decisions and think every day, okay, which are the stocks I should trade in? And sometimes those decisions, in fact, most of them I do, the decision making is like in the last 15 minutes of the market. So I have to scan through various setups that are there, and those setups have to be readily available on my screen.
Right.
So that's what you will be able to do, at that point of time.
You're a trader yourself, right?
Yes.
What's your advice to people who want to start trading? Someone listening into this and says, Rohit Srivastava himself is a trader. He's got a trading product. What's your pitch to these guys? Because we know that the data is insane out there.
Yeah.
Okay. I don't know about the value, but I know that the number of trading, the number of contracts in India now is probably the highest in the world. It's some crazy value. Thankfully, it's small ticket items, so it's not become something that could be a systemic risk. Hopefully, so far. What's your what would you tell a guy who wants to get into stock trading as a serious income and is willing to work hard and invest his time into becoming a stock market trader? What would you tell him?
So there are a couple of steps that are there, and we should be mentally prepared for the entire journey, because it's not something you will master in one day, 1 week, or even 1 year. I took many years, and through those many years, the market is going to beat you up all over the place. So definitely you need knowledge. I mean, if you go back to the 90s when you have also been in the market, we had very limited places to go and learn. Today, fortunately, there are so many people teaching you so many things about market analysis that you can really upscale your knowledge to a good level. So I think knowledge definitely comes first. That is the obvious part. But once you have gained the knowledge of how to trade and how to execute a trade, the second there are 2 or 3 steps more that will get added. The second one is, of course, learning to position size, something people talk less about. How do you size a position? Because we want to just take that one lot and make a lot of money. But if you are not able to spread yourself to 2, 3 and have some money management system, the chances of getting wiped out are very, very high. So, and specifically when I talk about options, options is a place where my view will be right, okay, but I might not get paid this month. In fact, that was my first experience when options got introduced in India. 1 month before 9/11, I bought my first set of put options, and and I lost money there.
Wow. Okay.
That was August 2001.
Yeah.
September 2001, I didn't do anything. and we had 9/11.
That as a put option.
So that is the first lesson, that time is something that you're playing for. Your views can be right, but will you have the capital to sustain? In fact, my whole technical team at Sharekhan, we used to meet up every month and play a game of Teen Patti. And the lesson we would get out of it is that it's all about money management, because you want to stay in the game. The purpose should be stay in the game till you get a good hand. And when you have a good hand, you should be able to play. And if you've wiped yourself out by bad bets and you're out of the game and then you got 3 aces, what's the point? Yeah. So it's the same in the market. You may have a very good view. Your view may be about to play out, but will you be around till it actually comes through? Yeah. So keeping money aside for that day when you're going to need to take that bet is also an important part. So that's the money management part of the lesson.
Sure.
There's a third one. Okay, third and final one. You learned all of this, you still fail. And that has to do with the last subject, which is behavioral finance, which is knowing about yourself. Because you will do silly things. Despite the knowledge, you will break all your rules. And learning when you do that, how you do that, how do you deal with a situation when you're winning, and how do you deal with a situation when you're losing, that goes a long way in actually achieving success. Because many people don't execute their entire plan. And it's for various reasons. I mean, there are innumerable lessons in behavioral finance and different causes why your brain functions in a certain way. But figuring that out is going to be also an important part of the journey to being successful.
Okay, Rohit, that was useful. What's the pricing of the product for a guys who haven't heard of Strike Money? It's strike.money, right?
Yeah, so it's web.strike.money.
Web.strike.money is the product.
Yeah.
Folks, you can go and check it out. Right now, only on desktop, not on app.
Yeah, desktop, on a iPad or any browser essentially. Okay. So it's only on a browser. Pricing is $650 per month, so very, very retail, comparable to most other products. People can choose an annual plan, 2-year plan, 5-year plan, whatever they want, and it starts with a 7-day trial, so they can even try it out. And we do regular webinars every Saturday, which are completely free, so that people actually learn to use the different tools which are on the platform.
And what if I'm not a trader? I'm an occasional investor, someone who likes to buy, hold for the long term, or even I don't know. Yeah. What's in it for me then?
Yes, so for that person, he would have to actually look at tools of the different nature. Like if he is studying the market just to know when it's the worst case scenario, he will look at sentiment indicators which are slightly more long term. Then he will go to what I have talked about in terms of valuation charts, right? You will want to look at the historical valuation charts, which we've actually plotted in the format where we've put 1 standard deviation and 2 standard deviation above and below the valuation, right? And you have the entire historical. Right now, we have it till 2012. I plan to backdate it till 2002.
20 years, wow.
Yeah, 20 years. Because you should be able to see 1 bull cycle, bear cycle, 1 bull cycle, 1 bear cycle. Because it's only then that you will actually know where the highs and lows were historically. Right? And all the data has to also be cleaned up, which is adjusted for, dividends, rights, splits, so that the chart is proper. So we've done that part. And so the long-term guy who's really looking at it once or twice is essentially want to just come and see these valuation charts. And we are going to be introducing a scanner where you don't even need to spend time there. You'll say, okay, I want only those stocks which are at -1 or -2 standard deviation.
Oh, you can do that scan?
Yes, you can do that scan. So you can just find the stocks which are undervalued today and then look at their chart and start thinking about investing. So that is what a really long-term passive guy would do. He doesn't need to go down and look at the daily level. He can look at a monthly chart, look at the monthly momentum,
right,
and and only at those stocks which are, at -2 SD. His job is done.
Give me a strategy to make a crore, Rohit, right now, please. What? No, nothing? No, I mean, seriously. So, the thing is that with so much of interest coming in retail trading, people think it's easy money. We know it's not easy money. Easy money is not happening in the markets. Do you think your tool can help me develop a strategy? A trading strategy. Here, I'm talking only of trading. Let's take the simplest form of trading today is index. Okay, I'm not even going to single stocks and all that. Thoda technical hoga wo call put on a single stock depends on a lot of stuff.
Yes.
Stick to an index.
Absolutely.
Can go with something like a Bank Nifty, which is like seriously the biggest index right now in terms of futures. Right? It's, I think, bigger than Nifty. So what's your pitch out here? Like if someone who wants to start trading, be a little bit safe, play around with either the Nifty or the Bank Nifty, how can Strike help me make a trading strategy and start my journey?
So I'll give the simplest strategy here for the sort of short-term traders. Okay, we have a sentiment indicator known as momentum swing. The momentum swing measures the momentum of a basket of the FNO stocks, and it moves between 0 and 100. So every time it drops below 20 or below 10, we think that is where the Nifty sort of bottoms out. So in a sense, I say that is where you should be buying call options. Now, the only thing you need to do there is watch for the market to turn as well. So because sometimes it can reach 5 and then next day, it's 3.
Yeah.
And then it will reverse from there. We found this happening repeatedly. Every month or two, you have readings which, hit the bottom end. And then the market bounces back from there. In fact, even on election day, the reading dropped to almost 3 because it was a wildfire sale.
Yeah.
And intraday, we could see the reading at 3, which is sort of gotten extremely oversold. All you need to do is wait for it to rebound so that you're not, catching a falling knife. And then that becomes a very good entry for people who are buying, calls of Nifty.
Okay, so you would buy a Nifty call at that point
You would
of
buy
time.
Nifty calls at that point of time.
In the money, out of the money?
I would say at the
At the
money
money.
with 1 or 2 strikes out at the most, because usually that is the range where the delta is comfortable. If you go too far out of the money, the delta drops and the chances of you making money really reduce.
And you're playing that for the expiry, you're playing that for the next day, you're playing that till the indicator is valid.
Yeah, so I would say you give it 0 to 5 days. Usually that's a good time horizon for things to move. It can be a little longer depending on whether it's a large trend or short trend, but definitely in those 4-5 days, you do get a move. So you will be able to book some gains.
Lovely. Folks, there you go. That's your specific strategy for at least starting to make money, or at least hoping to, to learn and develop your own strategy, because this was Rohit's strategy, can help you develop your own. And it's only when you try your own luck, your own skill and your own betting and your own money that you will actually make money. Rohit, now favorite topic of ours. Kya lagta hai, right? Because I don't know what you think. People like to compare this to 2003, 2008. Someone like you, who's been there, seen Harshad Mehta, Ketan Parekh, blah, blah. We know that this is a cycle, start, ending, top, blah, blah. Whatever you want to say is a different thing. But let's just start with general views. And let's look at it at past, present and future. All yours.
So, over this time period, there's so many things that have happened, and there are many more factors that I've also started to track, including macro. So initially it is just technicals. Then you're looking at, okay, how is the earnings growing? How's GDP? How's that happening? What is the investment environment? Which are the sectors that are doing well? And now we have this entire macro thing, which has to do with global interest rates, which has to do with the dollar. And all of this put together really helps me build a case as to whether markets still have space to run or they don't have space to run. There are a lot of interesting comparisons of this bull run, I think, starting from the COVID lows. Some of them, like you said, are with 2001 to 2010 or 7, 8, that period. Some of them, as we are realizing now with the retail participation and kind of growth that we are talking about India, because we are really seeing growth happen not just in large caps, mid caps and high valuations. This actually takes you back to what was happening in the 80s as well, even though it was the license Raj, at the time when we were actually opening up from the license Raj and companies were showing huge earnings growth because they were in that environment. And mid and small cap stocks also started to get premium valuations. In fact, even in the last stages, it was the sick companies that were getting valuations, companies that were doing absolutely no business. So that is your last stage. We are probably not there yet, but we are at a point where, mid and small cap stocks have, while they look expensive, many of them are also growing at crazy rates, because last year itself, I remember September and December quarters, Nifty had 30% growth and the mid and small caps had 80 to 90% growth in terms of earnings. Yeah. Now, when you have that kind of variation, you're looking at a very, very different kind of investment environment. So we end up creating portfolios which are based on the current momentum. What is working now? I want to be invested over there. And what stops working? So this results in us creating, momentum portfolios. Those have become popular. I've also been advocating that, with people who I train, that, try to look at this because you're looking at a higher rate of return. This is a market in which you can take risk. So therefore, having a momentum portfolio, which essentially trends with the market, is better than trying to pick something which has fallen and may recover, and then it doesn't do that well, and then your portfolio underperforms.
Then
So
what's your way of capturing momentum? Because the momentum crowd says that we don't look at fundamentals. Bhav Bhagwan hai. Bhav Bhagwan hai, whatever you want to call it.
yes.
We don't look at PE, we don't look at earnings, valuation, blah, blah, nothing. Momentum is pure price action. Is that what you...
So it's a mix because if I run a pure price action scan, okay, I can end up with a list of 50 or 60 stocks, but I need to filter out that whether I want to be in all of them. So I will do a cross section of looking at the fundamentals, and especially now that I have valuation charts, I will look at that, whether they are at the top end. In some cases, I even find stocks which are seeing valuations go down in what looks like a rising market. So we look for those kind of divergences and actually prefer stocks in that category. So there'll be different ones. You only want to avoid surprises, like you don't want to be in a place where you have a negative surprise, where a stock suddenly underperforms, or its valuation's gone so far that possibly you don't want to be there. So a combination of valuation and momentum is something that I find much more comforting, because if the momentum breaks, we give it up. Like even if the company is doing well, we may want to reallocate to something else.
Correct. Yeah.
So it becomes sort of an active strategy if you really want to play the momentum game. If not, fortunately, being a bull market, you have participation from so many sectors that even if you follow a slightly one step back strategy, you can be in various parts of the market which are doing well. This is not like, and I think this has happened every 10 years somehow. Whether it was, like I said, 80s to 90, that was one phase where everything did well. Then you had the 1990s to 2000, where it was only about tech and FMCG pharma.
Yeah.
Then again from 2003 to 2008, you had a phase where it was again all sectors, capex, cycle, infra, power, real estate, capital goods, everything did well. Then again from 2010 to 2020, you had a phase where, okay, it was only BFSI, FMCG, pharma. Now again, you're back to a stage where everything is doing well.
I don't know. I mean, do you think everything is doing well? Actually, no, you're right, because the equal-weighted Nifty is beating the Nifty.
Yes.
So there is that one small part of the Nifty which is गया गुजरा. मतलब you feel like ये time machine में है ये. कुछ हो नहीं रहा है यहाँ पे. 3 साल से portfolio देखो तो बहुत वहीं का वहीं है. Makes it a very lost, when you feel very lost out there, because you thought this portfolio has some fantastic names, which have been doing well, and then now you pick up that everybody right, left, and center is going in front, you're still left behind.
Yeah, but that has to do with rotation. So I think what happened, the initial push post-COVID was, okay, a lot of things went up. After that, we started to see rotation. Money moved away from growth into value, and then so that value into growth value thing sort of kicked a lot of stocks down.
Yeah.
Okay, while others moved up higher. So money is chasing something. Like this year, it's chased PSU stocks like crazy.
Defense.
So it's avoided banking. But if somebody just looks at the last 1 month relative performance, it's banking coming back.
Private banks, you mean?
Private banks coming back. Yeah. So if private banks, NBFCs coming back, then now you have a different landscape. So again, you have to shift course in terms of which sectors you're going to, overweight and which sectors you're going to be underweight. I think that is what is causing this portfolio variation. But it's happening. I can see a lot of stocks which were down for the last 1.5, 2 years actually picking up momentum now at this point of time.
Okay, so leave our audience behind with some nice money-making ideas. Come on. Let me also become a TV channel for once and say, I've got you here. Let's try and extract the maximum value. Let me make this more specific. So first is Nifty target.
So Nifty targets, I think, stretch... and I can say this slightly longer term, because if I say 27,000, because if we say just 26, 27,000, it's like talking about 1 month, 2 month, 3 months. So I think we are broadly looking at well above 35,000. Okay, and that's
5 years plus.
Oh, no, it should be sooner than that, because
Wow.
Because we are not even talking about doubling of the index.
35K Nifty in less than 5 years.
Look at the logic. What is the historical PE ratio of the Nifty? It's 21, 22 times. What was the peak PE ratio at the Y2K bubble? It was plus 30, 31, 32 times. Same in 2008. Even if we just extrapolate that much, because the Nifty is going up without the PE expanding. Reason? Earnings are growing, but the market is not going at the same pace, because it's possible, like you said, it's chasing other stocks which are growing faster. So this Nifty has this valuation gap. So if I just go from 20 times to 30 times, I have a 50% up move. From 22,000, that's straight to 30 something. So we are just taking that without accounting that there will be any growth cycle in earnings also. So if I add both of those together, it cannot just stop at even 35. So that is what I'm saying, that Now then becomes the question of time. Will this growth in earnings happen in 1 year, 2 year, 3 year? So that will set our time target. Time targets often go wrong, so which is why we try to say price without time. But I'm sensing it can't take that long. We used to be in a phase where index used to double in like every year. Now I think post-COVID, the first rally from say 7,500 to 15,000 took a little more. It took 1.5 years. So if that is the time, it can, in that kind of a time cycle, if markets remain bullish, why can't you really double the index?
So 15 to 30, we are at 24.
Yeah.
So it is possible. Saying that just pure earnings growth and some bit of PE expansion can easily get you there.
Yes.
Okay, folks, there you go. 30, na? 30K Nifty in some time, I guess. Maybe not, at least not 1 year, I guess. A little bit more than that, I'm sure.
Yes.
But at least we can say that the uptrend is.
The uptrend appears to be intact. I myself have been worried about it from time to time, so I will not deny that. And often these worries don't come from domestic reasons. They often come from global macro that we've started to study. Bond yields are shooting up. We start worrying, is this a problem?
Inflation,
if the dollar starts going up, we start worrying, is this a currency crisis? And as and when those things ease, we sort of start feeling comfortable. So even if we compare 2001 to 2008 in terms of macro, was a period where the dollar was in a bear market. And so all emerging markets benefited because the weak dollar drove a lot of liquidity into those places.
Asset bubble, classic.
Asset bubbles. And the second one is it also drove the commodity cycle.
Yeah.
So starting COVID, I sensed that these would be two things that would happen. You would have a commodity cycle and you would have a dollar bear market. Out of the two, the commodity cycle is already in place. The dollar bear market thesis got kicked a bit because in 2021, the dollar ended up making one more new high, just around the Russian crisis and the inflation crisis. But now that it's easing, if we have seriously done with the peak in the dollar, so far it looks like, then you're back to the commodity cycle. So recently in the last quarter, we've seen metal stocks, for example, start doing well. So that is for me the easiest bet. If we are looking at a world where debt is trying to be inflated out of its way and so on, commodity price inflation is the first thing that you obviously bet on. So you have to have an exposure to something like metals and that sort of safeguards you from both sides. If there's government spending towards infra, there's a metal boom because of demand. If it's government debt being written off through inflation, there's a expansion in commodity prices because of inflation. Both ways you gain from that sector. So that is one sector that sort of saves you in this environment.
Give me a top 3 sector list out here. We've got commodities.
Yes.
What else do we have?
I would think at this time to go with possibly infrastructure as and it's sort of a comeback theme. So you are seeing real estate infrastructure sort of pick up. So that becomes a secondary place.
Yeah.
And then you have capital goods, which is anyway been booming, and I think that also continues.
Okay. Banks, the biggest chunk of the Nifty?
Yeah, so banks do well, but will I put them in the top list? So I do have a view that interest rates are going to go down a lot in India. But who benefits most from falling interest rates? Banks, yes. But then I would say autos and infra also benefit because the capex cycle and so on. So who do I then bet on out of these sectors? So I have to make a choice.
Okay. Cool. So we've got the index. We've got the top 3 list of sectors. Rohit, I want to ask you about this whole small mid cap versus large cap. Okay, relative. We are now in what I estimate is the 4th year of this small mid cap bull market, which I think started somewhere around Jan 21. If you just look at the charts of the small mids versus the large, you've got this massive divergence happening. Post-COVID, everything goes down, everything goes up. And then Jan 21, there's this huge, nice split that comes in. Goes on in 21, goes on in 22, goes on in 23. Here we are in 24. Harish of Aditya Birla put out a great chart that day about how the BSE, the SME IPO index has gone up some mad number, 40, 50 times or something. So what's your view out here? Is this here to stay? This divergence is here to stay? Will it mean revert? What's going to happen?
So you will go through phases. And what we do to actually identify these phases of outperformance between mid cap to large cap and large cap to mid cap is simply plot a ratio chart. Okay, so we do a ratio chart between the Nifty and Nifty mid cap.
Very simple one.
Very simple one.
Right now, what does that tell you?
It's going up one way. Okay, which means the mid caps are outperforming the Nifty still. So the underperformance has not yet started. It will happen at some point of time, and that may not mean the end of the mid-cap cycle. Okay, it can also mean simply a pause in the overall stage for a year or two typically, and then again they will pick up and again start outperforming the large caps. So that will happen at some point of time, but it is still not visible.
That's insane. I mean, I just like to think of it that this way, that if Nifty had to even keep pace, I'm not saying outperform. So outperform to बहुत दूर की बात है. If Nifty had to keep pace with small and middies, it would now have to be at some, I think, 40K or something. Just for parity. So वो तो हो ही नहीं रहा है मेरे ख्याल में. Maybe not 40. I'm exaggerating, but I just, and again there's a cycle.
Yeah.
It's not the first time we are seeing this.
Yes.
It happened in, I think it happened. I think 15 के बाद bear market चालू हुआ small mids में.
So let me give you some perspective. 2018, the PE ratio for mid cap indices had reached almost 90. This is the NSE reported PE ratios. Okay,
90.
Yeah, 90, 100 for the mid cap, small cap.
Okay.
This time around, right now, they are still in the 30s. Okay, so they are not gone up that much because earnings growth now is much better than it was.
Hiren Ved was on our show and he gave some insane numbers of the total profit pool of the small mids, what it was 5 years ago versus what it is now. So his point was कि boss, this price action is nothing but earnings growth. तो PE expansion तो छोड़ दो, अभी तो सिर्फ इतना ही हुआ है. So you still believe that?
Yeah. So that is what I'm saying is that is what has happened. And sort of explains why this is extending and it's not insane. And the gap between Nifty and mid-cap is not that wide because it was wider in 2018. But these cycles do happen. I mean, I just remember 2001 to 2008. Okay, mid-caps were doing very well, and it's a time when I actually launched a PMS fund where we would say we'll invest in mid-caps and we'll trade a certain portion of the portfolio to make up for the beta. And I did it when that strategy was working really well and I had not looked at this ratio. So that's when I started looking at it. And this was just around 2005. What happened is that the Nifty mid-cap ratio actually peaked over there. So between 2005 and 2007, for 2 years, mid-caps were not outperforming the Nifty.
Wow.
And therefore, we actually were underperforming and, getting a lot of kicks.
Yeah.
And then 2007, 8, the last stage, everything moved up, and that ratio again started to shoot into the final stage. Yeah. So that is why I said that there could be a phase again here also where, at some point of time, because mid caps have run up a lot, they will underperform the Nifty and the Nifty will be playing catch up. We'll go through all of that. But it may not necessarily end the bull run.
I'm a bear now, just to play the devil's advocate.
Yeah.
Anything that scares you, anything that you think is a concern that might derail a lot of things, just to make sure that we are not overly out and out bullish right now.
Absolutely.
And just to, let's kind of look at the other side. Huh? Anything that concerns you.
I think the whole world is very slowly watching still the same problem, which is this inflationary cycle and how it impacts interest rates. Because if interest rates don't come down, it would make a lot of these things playing out difficult. Because how do I get a private sector capex cycle at current rates of borrowing? They would not want to go through with those projects at all. That is a problem. So we'll have to get this interest rate cycle turning. Everybody's talking about it, that is going to happen. But what can derail it is if inflation actually doesn't cool off. And that is, I think, the risk.
And other than all this, let's say that on a scale of 0 to 10, of making money in life, basically how easy making money is. 0 is like difficult. मतलब रात दिन निकालो पैसा बनता नहीं है market में.
Yeah.
10 is you're walking and you can literally see it on the street. ऐसा ये उठाया 10 का नोट मिला, ये उठाया 100 का नोट मिला. Okay. So 0 to 10 scale में how easy is making money in the market right now?
I think this year 2024 has been a bit difficult. Because except for the initial run in PSU stocks we saw in Feb and March, we've been seeing markets just gyrate up and down. So they've actually not been net returns in a big way. Even post this recent election, we had a big bump up for 2-3 days. After that, it's been very dull, 50 points. So it's not been easy for sure.
Interesting.
If you didn't do some amount of churn in terms of what sectors you held or what stocks you held from time to time, beating the index might not have been easy at a broad scale.
Yeah. But tell me one thing, let me ask it in a different way. You go to parties, meet friends.
Yeah.
Who's giving tips? Your friends or you? Huh?
Yeah, it's a mix of both. Yeah, there are a lot of people giving tips. Yes.
More than you're giving. They're telling you what to buy or sell in the market. फिर तो पैसा बनाना आसान है ना फिर तो.
Yes, it is. So that is the nature of bull markets. It becomes easy. Everybody becomes a tipster. You have many advisors out there.
You think we've reached there?
We have that environment, but that environment can last for a long period of time. I think that is what the
nice.
catch is, that just because everybody is making money and buying the dip,
Good one.
will it end in 1 month?
Not necessarily.
Yeah, I mean, it takes you back to the John Maynard Keynes' oldest saying, right?
Markets can remain irrational more than you can remain
solvent.
There you go, folks. There's your saying. Okay, stocks ka ho gaya. What about other asset classes, debt, gold? I don't know if you do crypto also, but anything on that?
So I write about crypto. I don't personally do crypto. I think the last time I was on the podcast, we discussed gold a lot. But that was 2018. Gold was just bottoming out at $1,000. Now it's like over $2,000. Does that mean it's at the peak? The answer is no. But equity as a class is actually doing much better than gold. And so that is why my allocation to gold is now sort of gone. But I am considering gold miners all over again, because that is the high beta play. So the way I look at investing in gold is buying the miners for that. And now we have the LRS scheme, right? You can move money, into a US broking account and, buy stocks that are listed there. So gold and silver miners on the US exchanges, I think, are an attractive place to play the gold trade rather than own gold directly
as an asset. Yeah.
As an asset, because they go up many more times than the price of gold itself. And
okay.
Yeah.
Debt
is a varying function for everybody. I mean, everybody would have some amount of debt because...
I mean, I mentioned that because peak of interest rate cycle going down.
So that gives you a very good trade-off. But and at times it does beat equities if equities go into a flat mode. I remember 2002, 2003 was a period where the Nifty was stuck. Sensex was stuck in 3,800 to 2,800, and bonds.
Market
you had a short bond bull market. Yeah. Now, if you have that kind of a phase, yes, you will get returns. You will get returns here. My expectation is interest rates drop. Now they're already below 6%, 7%. If they stay, I sense they go below 6%, so you will get a bond rally. But do you want to play the bond rally significantly, or will the equity rally at the same time be very big, good enough for you, is the bigger call. So usually an allocation to debt to me is more to meet certain, fixed requirements that you might have, lifestyle reasons or whatever reasons, maybe personal, family reasons, expenses that you need to meet. So you need to have so much in debt. So that is sort of how I think about debt. I've never taken a bet on a debt, just for the return on on bonds itself, So that's not something I've done.
Okay, cool. I think we're done. Any other asset classes out there? We've done equity, debt, gold, crypto, anything else?
No, I think that leaves only real estate, which is
okay.
Yeah. So in an inflationary environment, see, people think what are the safe haven assets is actually gold and real estate, which tend to fall less. But I've seen some historical studies that show that if you have a persistent inflationary environment, then even equities tend to go up, especially in a hyperinflation. And in that case, equities do as well as the other two, and sometimes better. But so it's good to have that fair mix. Every time you see an inflation risk, having some real estate and gold investments is a safe way of being there, because that solves, even if you get interest rate hikes, real estate and gold may be less impacted than equities. So
घर खरीदो ऐसा बोल रहे हो क्या?
Have some allocation.
Have some allocation. Houses are expensive, man, these days. Very expensive. Okay. Anyway, so now that we're done with the with the episode, standard question to all our guests that come here. Book recommendation, anything you're reading, anything that you'd like to share?
Yeah, so I've been reading, a lot of different things, and more recently, more about, the way the online world is evolving. I, in fact, ended up reading a book which says day trading attention, completely different topic.
Huh? Okay, what's the name, title, author, anything?
It's by somebody called as Gary Vaynerchuk, who talks more about social media and how it's evolving as a platform where, people are creators are becoming bigger than life in terms of...
You're talking about Roaring Kitty kind of thing and GameStop, that kind of stuff?
No, but more in terms of businesses.
Content creation as a business.
Yeah.
YouTubers and all that kind of thing.
Yes,
wow. Okay.
Yes, how that has become center stage in terms of marketing, in the business place. So completely different off-market.
Remember the book's name?
Yeah, it's called Day Trading Attention.
Day Trading Attention.
Yeah, that is the
by
name
Gary
of the book.
Vaynerchuk.
Yes.
Oh man, that's I haven't heard of that book at all, folks. But yeah, go for it. Anything else or?
Nothing that I started reading on the markets recently. After a lot of differential topics, because they went all over the place, and I couldn't really find something on the current environment. I think the last thing I read was a book called Debt by Ray Dalio.
Of course,
Okay.
yeah, that's a classic. Yeah.
So that, which he put out, I think in 2018-19, back
Right.
then, sort of explains the current environment, because he was talking of a repeat of the 1940s
I think
and
that
50s.
came before Principles, yeah.
Yes, the entire inflationary cycle and how governments and central banks reacted to it is what he was anticipating would happen now. Now, so far, it looks like that because you had government intervention in spending and you've had an inflation cycle. Let's see how it plays out. So if somebody's trying to understand what is happening right now, I think that is the book to really study.
Very interesting, folks. So there you go. Bullish on the Nifty. Then we had metals, commodities.
Yes.
Then we had
Infra.
We had capex. Those are the top 3 or 4 recommendations that Rohit has given on the show. Web.strike.money. Hit it on your browser. Check out the product. 650 rupees odd per month.
Absolutely.
2 years is a nice deal at some 21,000.
Right.
Go for it, folks. And that is it. That is a wrap on this episode of Paisa Vaisa. My guest, Rohit Srivastava of Strike.money, I should say. In India charts or whatever.
It's both. We founded both. Yeah.
Rohit Srivastava of India charts and Strike.money, web.strike.money. Rohit, thank you so much for doing this for our listeners.
Great pleasure doing that for you. Thank you.
Thank you, Rohit.